Hey everybody, good morning. It's Tony. I hope all of you are having a great weekend. For my really early message, just quick message for all my Patreon members that are watching. I will be out with the family today at the zoo. So I will be more than likely not by my phone all that much today. I will try to be, available, but for the most part, probably not today. For those of you that would like to join the Patreon and have access to, all of my indicators, my strategies, my setups, and how me and the Patreon have basically been short since a 430 SPY, right? And how to trade divergence and everything. Feel free to join the Patreon, right? I'll leave it in the comment section down below, and I'll put it in the description as well. So this is possibly, going into the video, this is possibly going to be the most important video that I've made so far in 2020, and this is apart from, this is apart from. Calling the top at 430 with divergence, right? Which is again something that I teach on my Patreon. At 430, I sold my whole portfolio and have been just nothing but shorts since we hit 430 on that long trend since January, right? This is possibly going to be my most important video apart from that. Maybe my second most important video, possibly my first important video. And what I wanted to talk about was FedEx and how FedEx and the Fed, right, Jerome Powell. And I already kind of told my Patreon members what this video was going to be about, but I didn't want to spoil it, right? Because I wanted to release it for everybody at the same time. And this is not a theory, right? This is not a theory. This is not common sense. This is just what is happening. And I feel like a lot of people aren't really taking none of this into consideration, or the macroeconomics of this, right? And it is FedEx. FedEx with the gap down, and from 203 to 160, it essentially took their options from 1 to 4 cents to $32, or an excess gain of like 300,000% in the course of one day because of this drop, which is ridiculous, first of all. And I wish that I had no idea, right? But this is insane. In their earnings, the CEO actually said that we are on the edge or on the verge of a global depression or a global recession. And FedEx is starting to notice this because of their logistics, right? They're essentially a logistics company. They know every single thing that happens around shipping, or at least they know the majority of it. And why this is extremely important, and the very first indicator, is because FedEx knows what's going on with shipping. And shipping is essentially the direct connection to a consumer for e-commerce, right? Or for anything internet, anything that gets shipped, any kind of product. So with FedEx essentially saying that their shipping is dying right now, right? It's essentially getting weaker and weaker and weaker. We can kind of use, the macro to determine that, guess what? You're going to see a lot of big tech hurt. You're going to see Amazon hurt. You're going to see Apple hurt. You're going to see anything that involves physical products get hurt by a huge amount, right? So I would think that Shopify starts really dropping heavily. I would think that Amazon gets hurt. I would think that Apple gets hurt. I'm not really sure about Google or Microsoft. I think they actually come out in strength from this, from this recession, or these next couple of drops that I think are going to happen, right? I actually think Microsoft and Google are actually going to be, not strong because everybody's going to fall, but I think that they have the least amount to drop, because Microsoft, for the majority, 90% of their product or 99% of their product is all digital. The same thing with Google, right? Apart from their phone line, which is, I'd say it's probably like maybe 5% of their overall revenue, which doesn't really matter too much. But the very first point is that FedEx is giving us an early indication of what they see in the economy, regardless of what everybody else is saying, right? Everybody else is saying, like the big CEOs, big money is saying that, we are going into a pretty hard time for the rest of this year, possibly next year. But I think that people aren't really taking it seriously, right? And a lot of, like, for example, Home Depot CEO came out and they are looking at an extremely bullish market. But again, that's real estate. So it might be something completely different. Maybe I'm personally very bearish on real estate. I have seen prices come down very little, but inventory still sucks, at least in my area. And I think as long as inventory stays low, I really doubt that we'll see a crash in real estate, right? But the first part of this is FedEx. The very first indicator is that FedEx is looking at a global recession or a huge global slowdown. And I think FedEx is the leader. I think FedEx is the very first person letting us know, because they have a logistics company and because they're 99% of their business is shipping. I think that they know that, retail is going to hurt. They think that commerce is going to hurt. They think that e-commerce is going to hurt. They think that anything physical good is going to hurt and I completely side with them as of right now. The second part of this is the Fed. Fed is an extremely horrible position right now, because we've had arguably, I think this last CPI report at 8.3% inflation was the worst report that we could possibly ever have. And I've already gone to this in my previous videos where, because gas dropped a significantly huge amount, some places you saw a $7 drop to under $5, so you're looking at 40% drops in gas, and you still have the overall market going up in inflation, overall supplies, overall anything, right? Everything is still going up, even though you have in gas drop 40%. So this kind of insignificant impact that gas had on inflation is the worst case scenario that we could possibly have had, because everybody thought that gas was the major contributor, the major controller of inflation. And the bad part is now that we know that inflation is affecting everything, which means that we haven't really dropped that much in inflation. And now if gas, for whatever reason, starts trickling up a little bit higher, inflation is gonna get that much worse. And that's the horrible part. And that's where the Fed is stuck, because guess what? If the Fed decides to pivot, that means that inflation is gonna get a lot worse. Arguably, if the Fed pivots and we start decreasing we start decreasing the rate hikes to like 0.25 basis points, right? To point like 25 basis points or 50 basis points, 10 basis points. Arguably you could have a small pump in the market, but it's going to be all destroyed on the next CPI reports when you start getting these ridiculous inflation numbers. On the other hand, you can have Fed go full force into this problem and increase rates by 100 basis points, but now that just means that the Fed is saying that there's a real problem with inflation and something that they cannot control. So I think this is a worst case scenario where the Fed cannot win here. There is no winning right now. I think we are at a lose-lose situation, and I think for the most part we are looking at extremely bad drops. And if you're still in the video, I'm still here. I wasn't just showing a screenshot of FDX, but I did want to show, if you guys did see or have seen my previous videos of Renko and what I have going on right now for the SPY. Let's get rid of this so it can be a lot easier for everybody to see. My Renko chart has never been wrong, right? It's for the most part been 99 to 100% accuracy. And this is something that I posted on my Patreon early today in the morning. We closed a bearish entry right here at the close. As soon as SPY closed under at 390 exactly or under, it was game over. It's game over, right? I mean, I've been shorting the market ever since we hit 430, right? 430, like back here. I don't know when we last hit this, but ever since, I've been short heavily since 430. But after this close, this perfect entry, right? Historically, from here, we are looking at $60 to $80 drops on the S&P 500, right? If we're looking at historical drops, right, we can just use a horizontal line, mark exactly where that trigger happened, right, at the 390 mark. We're looking at only similar drops, or only historically, similar drops. And what we want to do is, let me see if I can find some, anything historical drop from. So anything close that we could arguably see from here on the SPY, we're looking at what, a close from 120 all the way down to 70. This is a difference of like $50-ish, $60 from the highs. Again, the only other similar historical drop is from right here, right? We closed at 430 and you actually ended up dropping all the way to 370. So you drop like $70 here. You're looking, right as of right now, you're looking at a $60 to $80 drop from these levels right now, which would put us at the original divergence targets of anywhere between 310, 320 to 340, 350, 330, 340, 350, around there. So I think this is just the start. I think we're looking at a significantly lower market. I've been bearish for a very long time. I actually thought that we had a very small chance of rallying to the upside, but even right now, if you look at Ethereum and Bitcoin, we're starting to dump pretty heavily. We're starting to go a lot lower to the underside. And the thing is, watch, you can see, look, the 8 hours you're gonna have an 8 hour trickle down on Bitcoin, right? But the 4 hour, I actually took a 3 hour bear. I've been short on Ethereum since roughly up here. You're already seeing, Bitcoin's down, Ethereum just broke new lows. I do think that Ethereum is headed to $1,300. It's just the whole market TA wise is looking horrible. You know, I told you guys that if we break trend up here, we're running apart, and we never broke trend, right? Ethereum looks bad. Bitcoin looks bad. The SPY just closed a bear trigger on the Renko chart where arguably it's been 99 to 100% accurate just by blindly looking at it, right? Listening to it. And you know, the Fed, if they don't, I have no idea what they're going to do. I have no idea what's going to happen this week. There's rumors that they're actually going to raise interest rates by 500 basis points, which is, it's absolutely ridiculous to me. I have no idea how that would benefit the market. I think short term, that gives us a really good chance that SPY dumps to like 370 this week, which is absolutely abnormal to me. I just think that I just think that FedEx giving us that early indicator was the early sign, and it really just comes down to the Fed. But I think it's a lose-lose situation. Either the Fed increases rates by 100 basis points and the market suffers, or the Fed does nothing and pivots away from high interest rates, which means that inflation keeps going up, and which means that next CPI report comes out possibly at 9%, possibly higher again, and we lose that downtrend on inflation. I think as of right now, it's bad all around, and I have no idea what the Fed's going to do. And I think we're at a pivotal point right now where I think we either crash all the way down to like 320, or the Fed takes something out of their ass and we start QE again. That's the only thing that I can think of that can possibly help the market and push inflation down the line. Maybe quantitative easing helps them. I have no idea. But as of right now, I think everything is in a lose-lose situation for the Fed. I think the stock market is going to go down. I think crypto is going to get a lot worse. I have no other words. Have a great weekend, everybody. I'll see you guys later. Bye-bye.